And joining me now is Jay McAndrew. He's head of strategic beta sales for Columbia Threadneedle Investments. Jay, it's great to have you.
Kristen, thank you, and to the New York Stock Exchange for having us. We love coming here, and we had a great morning this morning.
It was fun to see your crew on the podium celebrating the market open. Of course, our viewers can see the signage behind us, 5 years of the REX ETF.
Yes.
What do our viewers need to know about it?
Well, the first thing is, let me just explain the name, which is Research Enhanced. RECS is Research Enhanced Core Solution, and it's a very simple concept. Most investors know about traditional indices. The Research Enhanced process with REX really gives you the best of what Columbia Threadneedle thinks is in the index. So we recreate an index, the Russell 1000 in this case, but only using stocks that we rate as strong buy or buy. So said another way, Kristen, we like to leave out the losers to try and help enhance performance. And REX has done exactly that over its 5 years.
How do you grade those holdings? What is that process?
Well, the process is, it can be technical, but to keep it easy, it's a quantitative process. At Columbia Threadneedle, we've had a quantitative model in existence for over 20 years. And we look at three main factors, including QVC, like the TV channel. We'll call that quality, valuation, and catalyst. And we rank every stock in the Russell 1000 every single day. And then we have a normal distribution. So once we score every stock, we look at the top 15%. Those are our strong buys. And then the next 20% of scoring stocks are our buys, and all the rest is either hold, sell, or strong sell. So we're only using the strong buys and buys.
What are the best performing stocks or top holdings in this ETF?
Well, you would see a lot of the traditional Magnificent Seven. So we've owned the I would call it the Mag 6, ex Tesla. And as I mentioned earlier, part of REX is about leaving out the losers or cleaning up the kitchen sink in traditional indices. And when we look at 2024 and the performance that we had there, part of our positive attribution was not owning companies like Intel, Boeing, Nike, and McDonald's.
Interesting. So what about Tesla in particular? Has it excluded from this index?
Well, I don't actually have the quantitative model in front of me, but my guess would be from a valuation perspective, it probably relative to its peers has a higher valuation and not necessarily with the earnings just yet. So that might put it at a little bit higher marker than the other peers in its group.
REX is, of course, one ETF that Columbia
Correct.
Threadneedle offers. What else can investors get from its offerings?
Well, last year we had a really strong year as a franchise. We brought in over $2 billion, and REX led the way with over $1 billion. But outside of that, our second fastest growing ETF is called XCEM. That stands for Emerging Markets Core, ex-China. And it's not necessarily a call, an investment call on China, but it's really a tool that we developed for specifically RIAs who said that they wanted to be able to control and modulate the amount of China that they have in their emerging markets portfolio. And what we found as tensions have risen between the two countries is that if advisors are and investors are owning China, they want to be able to silo it, not as part of an emerging market exposure, but have it in its own sleeve so that if tensions did reach a boiling point, they would be able to exit their China position very quickly with the push of a button.
Obviously, these indexes are based on individual stock performances, also on the indexes that they track in certain circumstances, like REX, for instance. How do macro elements like the economy, like trade talk, like earnings impact your outlook?
Well, for us, and specifically back to REX, we look at everything back to our roots, which is fundamental research and research intensity. So we always know that there'll be changes in the macroeconomic factor. And in the case of REX, it's not necessarily about what's happening from a macroeconomic standpoint. It's about how the individual component companies and their individual performance relative to others stands out that would get them a higher ranking or a lower ranking to be included. So always important, but the idea is we want to own the best companies at all times.
All right, Jay McAndrew, he's head of strategic beta sales for Columbia Threadneedle Investments. Jay, thanks so much for joining and congratulations.
Well, thanks so much, Kristen. We appreciate the time.
It's great to have you.
Thanks.